All right, let's start with Mesoblast widening its losses in fiscal year 21 from around $80 million last year to $100 million this year as the biopharma awaits regulatory approval from the FDA in the States on its flagship remestemcel COVID treatment. And Mesoblast has about $140 million of cash on hand, with the chief executive saying he's pleased with the FDA providing some clarity on the pathway to emergency use of its COVID treatment. No dividends, no guidance. So as a result, shares have come off hugely today, down 14.5%. In the retail space, Harvey Norman saying it will repay $6 million in JobKeeper after reporting a 75% surge in full-year profit, continuing to benefit from lockdowns and consumer spending on homewares and appliances. Earnings coming in at close to $1.5 billion, with the board also declaring a 15-cent a share final dividend. As far as the outlook is concerned, the company flagging recent lockdowns have hurt sales in July and August, but it does see a quick recovery in spending once those restrictions are eased, thanks to pent-up demand. Online sales have driven Shaver Shop to a full-year profit, up nearly 70% as the trend toward DIY grooming sparked by a flood of online buying, with e-commerce sales driving some 28% of revenue there. Total sales up around 10%. And in the first few months of the new fiscal year, that growth has spiked again by more than half. Hasn't provided forward guidance, but the company has raised its dividend with a fully franked payout of 5 cents a share. Bubs Australia has deepened its losses in fiscal year 21 to just shy of $75 million. That's down heavily on last year from its $16 million loss as Daegu and border closures hit earnings and revenue. And it has suffered more than $12 million in write-downs and write-offs following the flash sale of excess stock. Its shares are set for their worst day in 3 months on the bigger than expected annual loss, down close to 2.5% at this point. All right, just some of the other ones moving today when it comes to those share prices, with a final flurry of reports on the last day of August. In the energy space, MMA Offshore recording a fall in revenues as the Delta variant reduces its ability to operate and give guidance. The company did swing to a profit though after last year's near $100 million loss, and the managing director David Ross saying the medium-term outlook is positive with increased activity forecast across all its major projects. Regis Resources shares taking a dip as costs hit profits. The gold play reiterating its warning the September quarter will be soft due to major scheduled mill shutdowns and pit rescheduling. And Sandfire Resources shares marginally lower after a strong copper price pushed the company's full-year profit up more than 130%. And in fact, we're just about to speak to the Chief Executive, Carl Simic, off the back of those full-year results. So stay with us for that. Now, as we mentioned at the top, we are at the tail end of reporting season. John Lockton from Wilson Advisory saying he's impressed with the numbers over the last 4 weeks, saying reporting season has survived the Delta test. And Ord Minnett crunching the numbers, around 75% of companies either a beat or in line with expectations. Upgrades to earnings forecasts were at 19%, predominantly in the materials and financial sector. And David Lane saying, overall, the ASX 200 has received a B+ grade.
We said at the start of results season 4 weeks ago that if we could get through this 4-week period with earnings forecasts of around about 20% for FY22 being intact, i.e. 20% growth for the next 12 months, then that'd probably be a pretty good results season given what's going on, Sydney, Melbourne, etc. And that's largely held together over the last 4 weeks. So I look at forecasts this morning for the next for fiscal 22, and we've got just over 20% earnings growth across the market. So that's quite remarkable when a number of businesses, as we saw over the last 4 weeks, are effectively shut.
Yeah, we're maybe a hard marker at B+, but overall, 75% of the companies that have reported have been either in line or better than analyst expectations. So about 28% of those that have reported are ahead of expectations. So overall, we think it's been a pretty good reporting season, and to be honest, it has actually been a season where expectations were fairly high. So it's probably good to come out with a B plus this time around.
One of the key themes around this reporting season has been vaccinations and whether companies should mandate the jab for employees. Qantas and Virgin already mandating all staff to be vaccinated, with all cabin crews set to be forced to be double dosed by November. And BHP today saying it's considering making vaccinations mandatory at its Australian sites, with a mandatory policy likely to come into effect next year. And speaking to the C-suite throughout this earnings season, the general consensus is encouragement from the corner office to get vaccinated, with higher rates set to be key going forward. However, many noted the legal minefield when it comes to mandating them.
The vaccinations is really going to be the key, and particularly, we've got a spread of work across Australia and internationally as well. We work in the US and Europe, so it's important for vaccination rates. We find our European workforce are about 99% vaccinated, so it's really gone through a lot of Portugal and Spain where we work, and they're heavily vaccinated now. In the US, we're around 50% of the US is vaccinated. But we'll rely on our policies, I think, driven by the charter flight companies. I think we'll be driven by the clients and the camp accommodation requirements. I'm pretty sure that at some point in the near future, there'll be mandated vaccination for all workforce that are remote, and that will help us ensure that our workforce is fully vaccinated, because it's a difficult one to mandate. It's a bit of a legal minefield at the moment, but we are heavily encouraging our workforce to get vaccinated, and we're doing everything we can to educate them about the benefits of that.